Hi, welcome back to the Wealth Optimization Workshops with Scott Collier, the Call Dog here. Looking forward to sharing some great ideas with you. We're going to touch on a topic today that isn't everybody's favorite. It's the one sometimes they run away from when it comes to financial planning, and they hide and they don't want to talk about it until something happens. But then we're the first ones they call when it's a day too late. So anyway, just going to take you back to our financial planning pyramid and the concept of building from the foundation up. So we're going to deal with your non-controllables in the next number of workshops, whether you think it's the fun stuff or not. I know you want to talk about the controllable priorities, saving for retirement, building investment wealth, and saving for your kids' education, becoming mortgage free. Those are all really important. We're going to dive deep into those. But we've got to deal with this topic first. And the key, we've already touched on wills, powers of attorney. But what happens when you pass away? And why would you need life insurance? The big scary. The car insurance industry has commoditized this concept because regardless of which company or which product is better than another, everybody thinks car insurance is exactly the same, and it's not. However, particularly when it comes to life insurance, there is extreme differences from one product to another, one plan design to another, and they're meant for different reasons and different purposes. We're going to touch on that going forward. But first off, why would you even need it? Well, let's take a quick look. Here's some of the reasons. Some are relevant for some people, not others. You decide what is relevant for you. Final expenses and estate settlement costs. What do we mean by that? Funeral costs could run you $20,000. Estate settlement costs. If your estate's very simple, probate, estate administration, tax, lawyers' accounts might not cost a whole lot, but it'll still cost something. But the wealthier you are and the more you have in your estate, the more complex it is, the more expensive it becomes. So how can we minimize some of those costs? Immediate needs. Right? What immediate needs would your loved ones, would your family have if something happened to you? Do they have a transition fund so they can take time off work to grieve and to adjust to their new normal, as my partner Jody says? Right? Do they have a plan in place, or are they going to have to rush back to work 3 days later? So how's that planned out for your spouse, for your children? Often mortgages and debts, and we're going to dive deeper into mortgage insurance and why personally owned coverage is a lot better than creditor coverage. But are your mortgage and debts protected? How about your children's care? If they're young, maybe they need daycare, right? How about their education, right? Is it important to you that they get a college or university education? And how's that going to be funded if you're not here to help fund that for them? Have you thought about those issues? One of the big things people constantly forget about, income replacement. They go, oh, if you can put me in the ground, cover my debts, I'm good. But the reality for a lot of families, spouses, and more and more you have two parents working in a family, but even more exacerbated if it's one family member that's the primary income, how would you replace your income? That income is worth hundreds of thousands or even millions of dollars to your family in the future to pay for everything that you have in life. And you have far more expenses than just a mortgage, right? Is a portion of your income going to be replaced to help provide a period of time so that your family can transition? Does that make sense? Now, often if people have lots of wealth, that may not be an issue. The everyday family, those are the big issues. But if you have enough wealth, then there's going to be tax consequences on your estate, whether it be capital gains on your business, your family farm, and the succession planning and transitioning that is required there, deregistering registered assets like your RSPs and your RIFs and the tax consequences there. Have you planned around that? We're going to touch on all that as we move forward in more detail, but have you taken care of that? Because life insurance and the tax exempt status of life insurance can be great to help you with that. It can even be a great strategy to help you with your retirement income planning, and people don't realize that because of the preferential tax treatment of life insurance. We'll touch on that moving forward as well. And finally, charitable giving. Is there, it might be your church or school or a service organization, something that's precious to you and you want to leave money behind. This can be a great way for pennies on the dollar to take small amounts of money and transition them into something of value that you want to leave behind as a legacy or an importance to your family, to your loved ones, to charitable causes. right? And to make sure that there's business continuation, so whatever is relevant for you. Ultimately, I think you can sum it up a couple ways. I've often heard people say, well, I can't afford it. If you can't afford a premium, then you can't afford not to afford the premium. Because in 19 years and thousands of meetings with people and clients, I have never, ever seen somebody go bankrupt because they couldn't afford a premium. Unfortunately, I've seen many families that end up financially devastated or bankrupt because someone didn't afford a premium. So take that to heart, that a friend of mine a long time ago taught me this idea, that there's only two major reasons, that all this stuff can fit into two big reasons of why you may need life insurance. Because you have financial obligations and you want to take care of those responsibilities and financial obligations if something happened to you. Or the second reason, because you love someone. Is there someone precious in your life, or multiple people that you love, that you want to make sure that in the worst point in their life when they've lost a loved one, that they at least have the financial resources to rebuild their life and sustain their standard of living, and to be able to continue on with the desires and the plans that you had for them in their financial future. Hopefully some of these ideas touch your heart, help you make sense, so that you think your way through these things. We look forward to diving into more specific topics as we go along. Hope you have a great day. See you soon.